Thank you, Mr. Chairman and Ranking Member, but let me first thank you for allowing me this opportunity. And my delayed arrival was because, again, a bipartisan event was being held. Congresswoman Kathy McMorris Rogers joined other leaders as we saluted Leader Pelosi for her gavel and suit going into the Smithsonian this morning. But let me say to our witnesses, thank you for being here, and to my colleague, Mr. Rothfuss, who I had the pleasure to work with on a bipartisan basis to advance this bill through the Congress. It is always a pleasantry to welcome our witnesses, but today I take special honor in having someone here from my district, and thank you, Mr. McAfee, for being here. In my opinion, this bill simply seeks to right-side the excessive burden of regulation placed on insurance savings and loan holding companies compared, and this is really important, compared to the risk they pose to financial stability. None of these companies have ever been designated by the Financial Stability Oversight Council as posing a risk to the financial stability of the United States economy, yet they face similar regulations by the federal government as if they were, all because of the way they're structured. There is no reason, in my opinion, why a smaller insurance company like Ohio-based Westfield Insurance Group should face more regulations than some of the larger insurance companies in the country due to the fact that they have a small depository institution. For me, it just makes no sense. Now, this is a bipartisan bill, and I'm reasonable, so I look forward to hearing from the witnesses on their experiences as insurance savings and loan companies and ways to improve the bill. Thank you, and I yield back. Thank you so much, Mr. Chairman and Ranking Member. I have a series of questions, so I'm going to ask you for shorter answers. But first, Mr. Chairman and Ranking Member, I would like to enter this statement for the record. It is a letter from the American Life Council of Life Insurers supporting this bill.
Without objection.
Again, let me thank all of the witnesses here and say how much respect I have for all three of you. And at any time in my career that I've read something from all three of you, here's a good answer. I've agreed with all of you on some things. So we're going to take it down a little notch here. And first, let me say to you, Professor Schwartz, that I appreciate your comments. And you would be happy to know that we are already in some discussions about making some changes, which are no doubt important. But after hearing Mr. Bach's story about Country Financial, Professor Schwartz, do you believe that spending 25% of a company's compliance cost on a subsidiary that accounts for only 0.2% of a company's total assets is excessive and burdensome? And a quick answer.
Yeah, it may well be. I do think that there's a very important goal here of reducing regulatory costs. I just think we need to do so appropriately.
Okay, so let me say to all three of you that we have three members from the great state of Ohio here, so to my good friends from Nationwide, I know I speak on behalf of my other two colleagues, and you may later tell my two Republicans that I spoke for them today. In thanking you, but also beyond this, I want to thank you for running an outstanding business and that you've been a true partner to the community to help Columbus and Central Ohio to keep us moving forward. Mr. Mahaffey, this question is for you. Nationwide is subject to group-wide supervision by the Ohio Department of Insurance. Is that correct?
That is correct.
In addition to being regulated by the state of Ohio, are you not also subject to financial condition supervision and regulation in Arizona, California, Iowa, Michigan, New Jersey, New York, Texas, as well as subject to insurance regulations in all 50 states and the District of Columbia?
Yes.
And on the federal level, are you regulated by FINRA, the OCC, SEC, Department of Labor, IRS, and subject to group-wide supervision by the Federal Reserve?
Yes, that is also correct.
Seems like a lot of regulations to me. Are you aware of any other class of financial institutions that have dual holding company supervision by the Federal Reserve and another prudential regulator?
No, not in the U.S.
Are insurance savings and loan holding companies regulated on a group-wide basis by two regulators because they are the biggest and most complex insurance company if they were to fail that would bring down the U.S. economy?
No.
And who has had more experience and more expertise in regulating insurance companies such as Nationwide, the Ohio Department of Insurance, or the Federal Reserve?
Clearly the State Departments.
If this bill were to become law, would you still be regulated by the Ohio Department of Insurance and all other states you do business in?
Yes.
Your depository institution would still be regulated by OCC, is that correct?
That is correct.
And you would still have to comply with the Federal Reserve's insurance capital requirement, submit various reports to them, and be subject to direct supervision if the Federal Reserve believed that your company was in material distress. Is that correct?
That's correct, and I would include in those capital standards prospective stress testing as another requirement.
Okay. Can you explain the benefits of Nationwide's depository institution provides to your business, your customers, and why you have made a decision to not get rid of it?
Sure, and being as brief as possible, one benefit we have as a mutual insurance organization is the benefit of diversification of our risk portfolio. That is the benefit of anybody buying insurance, is diversified risk. The bank gives us another business with uncorrelated risks to the rest of our business. More directly to our members, to those people we exist to serve, it provides additional products and services that we can uniquely tailor to their needs that work in concert with the other products and services we offer. The examples I gave in my testimony of prepaid claims cards and emergency debit cards for folks in the wake of natural catastrophes are perfect examples of that.
And lastly, do you not believe that the state-based insurance system that has governed this country's insurance system for almost 150 years is effective and time-tested?
Yes.
Thank you, Mr. Chairman, and I yield back.